Property speaking, Philip Skuman is here already. Good morning, Philip. How are you doing?
Good morning, guys. Thanks for having me, as always.
Good to have you here. And well, according to experts, South Africans are losing their homes due to high interest rates. And despite the 25 basis point interest rate cut, many South Africans, including high income earners, are currently cash strapped and in debt. So last week, you remember, someone asked if it was possible to apply for a fixed interest rate when buying property. Like, because he was saying, when you buy a car, like those kind of things. And Philip answered that question. But Philip, let's talk about what you make of the interest rate cut and what it means for property owners. How can they make the best of it?
Okay, so I think there's a lot of cautious optimism in the market. Currently, post the rate cut, and we were at a broker retreat earlier this week, and we had the privilege of listening to an economist, Dr. Rolof Botha. And, he is not just cautiously optimistic, he's highly optimistic. He showed us a couple of indicators and KPIs, and all of these economic, measure points have all indicated that we should have had a rate cut way, at least 3 months ago already. We should have gone deeper, and we should have, we're probably going to end up, if he says, if he had his opinion, probably on 9.25. That's where we should be. Looking at all the indicators. So I think definitely if you follow trends, you'll note that we are now in a downward trend, and probably within the next 2 years we'll reach the bottom point again. And then it'll start probably ticking up, following normal cycles. So I think a lot of people are currently cash strapped, and like I always say, if you can afford not to sell, don't sell, because now is the time to buy.
Okay. So, Philip, when it comes to interest rate, I mean, the issue around fixing and, when you're buying whatever, what's your advice on that?
So, yes, you can fix your interest rate, but the maximum term they're going to do it for is 5 years.
Oh, and then?
It's not like a car. A car is, your payment term is 5 years, so 6 years. So if you fix it for that time frame, you're fine.
So if you choose to fix for property, they only give you 5 years?
They're only going to fix it for 5 years.
Okay.
And secondly, they're going to see you coming. So let's say prime is 10 and you want to fix it, and they are on a downward cycle. Or let's say the economy is on a downward cycle, so it's going to go less than 10. But now you want to fix. They're going to give you 11.5. They're going to say, sharp, we'll fix it at 11.5. They see you coming. So it's like a scam, in my opinion.
So maybe what in terms of like the pros and cons of applying for a fix?
If you time it properly, let's say you fix it at the low point, you're still not going to benefit anything, because they're going to increase it by 1.5, so. And 5 years, a lot can change in 5 years.
Sure.
Wars can start, wars can end. So in my opinion, on a house, it has its pros, because obviously now you can budget, but you should, I think, have the discipline to do this yourself. My opinion is you shouldn't fix your interest rate, but you could. Okay. It's definitely possible. I just don't see the benefit of it.
Okay.
There's a supposed benefit, but like I said, that increase is just going to knock you. If you do fix your interest rate, like I said, there are benefits. You could, you're going to save money in the long. You're not going to save money. My opinion is you're not going to. It's a scam.
Okay, Philip, we'll leave it here. Thank you so much for your time. That's Philip Skuman. You look like you want to say something, compassion.
No, I just had a throwback moment. Not everybody will give you the fair advice that Philip just gave you right now. People will tell you, no, fix it, so that you can have a little bit of relief. But that 5-year term never comes up in the conversation. Nobody tells you that. And you are of the opinion that for the next 20 years, I'm going to keep my installment at this rate.
Philip, maybe let me take advantage of while you being here, just trying to tap into the sitting you had this week. You talked about the economist who was highly optimistic, just based off what you were able to gather from him, him being highly optimistic going into December, into the new year. Any insights as part of just closing that you can share?
So what they're saying is the reason they didn't drop it further now is so that South Africans don't get too much relief before Christmas and go and spend money irresponsibly. So they're planning on doing a bigger cut next year. Definitely they will cut.
Okay.
But it's a timing thing for them. So but still, if you look at all the indications, and it's economics 101. If you drop the interest rate, that optimism will fuel optimism, and people will spend more money, and the more transactions there are on credit, the bigger the economy grows.
That's what I was thinking.
So it has a positive benefit. But now, I think the bank wants to rather give you the discount now, recover a little bit, because as you quite rightly said, a lot of South Africans are under serious pressure. And some of them are losing their homes. But yeah, so just to get back to your answer, I think, in January it'll drop, and that's going to stir a lot of positive movements in the market again.
All right, we'll keep an eye on that. Philip, thank you. Broker and owner of REMAX, Philip Skuman.
Thank you, guys.